Investors await the outcome of today's Treasury bills auction. Meanwhile, traders at UBA say the decline in system liquidity is prompting an upward movement in the interbank rates. Chuka Nwachukwu, head of ALM and balance sheet management, joins me for more market updates. Chuka, thank you for taking the time out to join us today.
Thank you, Esther.
Well, it looks like the results from today's Treasury's auction is out. Talk to us about stop rates and subscription levels.
Yeah, thank you. The results of today's auction came out some few minutes ago. We saw well over 400 basis points movement from 9% levels to about 13.97. That's quite huge.
That's quite a jump.
Yeah, I recall my last program, I said that we're expecting about double digits, and this actually passed my expectation by well over 150 basis points. Yeah, so this actually has also affected sentiment because system liquidity is quite tight. System open on negative about over 250 billion, and then if you watch the subscription, well over 1.5 trillion, it was the subscription at the today's auction, and then of course CBN sold what was offered, which is about 303 billion.
Well, at 13%, I mean, so where does that put your forecast for the movement of these rates? Higher, or could we say tapering?
Yeah, as long as the system is tight, auctions like this, yield will continue to go up. The rate, like I said earlier, the system obviously has anticipated this, but not as much as this. And so we're going to see other instruments, especially on the bond side, we're going to see the yields, move higher. On the bond side, for example, the 2053 is trading around 16 levels, and we'll see the other instrument follow suit as well.
Well, 16% levels on the bond side. I mean, that has implications for, debt servicing for the government. We know the government is borrowing heavily at the domestic market. Do you think that, I'm just wondering, for how long can this, well, you've said it depends on liquidity levels at the market, but the government must be concerned about this.
Yeah, of course, the government must be concerned. Recall that early this year, when the budget Minister of Finance discussed about the borrowing strategy, they did say that they will borrow heavily from the market, especially on the bond side. And so with this level of movement in yield, it's not favorable to the government because they would like to borrow as low as possible. And as long as the government is also desperate to borrow more, they have to make the yield attractive for investors to be able to to be able to subscribe to these yields.
A case of damned if you do, damned if you don't, between a rock and a hard place. Talk to us about your forecast for trading for the rest of the week, the money market. Talk to us about that.
Yeah, the money market, is still very tight. The only liquidity we're expecting, hopefully before the week runs out, should be FAC. The Federal Allocation Committee approved about over 900 billion to be shared among the three sectors of the government, the federal, state, and local government. And so that should be paid between now and Friday. If that happens, we'll see liquidity in the system, and that will reduce the high rate of borrowing we are seeing now overnight. Well,
speaking about liquidity, let's wrap this up with the FX market. We've seen Naira hovering around 770 levels. I believe that was the last close. Correct me if I'm wrong, but where is the Naira today?
Yeah, Naira is currently trading at 770.2 levels. Depreciation from yesterday, which was around 762 levels. So it's been hovering around between these levels, and that will continue as long as the demand continues to outweigh supply.
All right, Chuka, we'll leave it there. Thank you for talking to us today. Appreciate your time on the show. Well, that was Chuka Nwachukwu, head of ALM and balance sheet management at UBA, taking us through trading at the fixed income market today.